Hey guys, welcome to my channel, Nick's Taxes, where I talk all things personal tax, finance, and investing. So if that's something that interests you, I'd ask that you hit the subscribe button below and follow along with me on this journey. So the big question right now as we enter April is what's going to happen with the stock market? I've been getting a lot of questions lately asking for my opinion about what the stock market's going to do this month and in the near future. So in today's video, I'm going to give my thoughts about what's happening in the stock market. So to start, let's give a quick background about what's happened in the past couple weeks. At the end of February, we saw record highs on the market, and then there was a big crash. And on March 12th, we entered what's called a bear market. And as of March 23rd, the stock market was down 37% on the Dow. Then following March 23rd, we saw a 3-day rally of 21.3%, marking the largest 3-day rally in history since 1931. That rally got the market out of a bear market, which represented the shortest bear market in history of only 11 trading days. Then on Friday, March the 27th, the stock market dropped again by another 4%, bringing us back into a bear market. So the question is now, is that it? Are we going to see further drops? Are we kind of out of this bear market and going to go back to our regular highs? Or what's going to happen in April and in the near future? Well, in my opinion, I think we're in for some more tough times ahead. I think we're going to see new lows, lower than the amounts that we saw on March 23rd. And we might be in it for the long haul. And here are the reasons why. The first reason is due to this crazy market volatility. Right now, there's more people in the stock market than ever before, and that's because there's way less barriers to entry than there was in the past. You can trade stocks with an app on your phone, whereas back in the day, you needed to have a broker, and you probably need to have a set amount of money that you are willing to invest in order to get into investing, whereas now you can start with any amount of money. And you can use easy apps to start investing. So there's a lot of people now that are investing in the stock market than there were in even 2008 and 2000 in those crashes. When there are more people trading, typically that results in more price swings. And we've definitely seen a lot of those this past month. Another reason why we see big volatile swings is because of algorithmic trading. And trade limits. So a lot of times investors have these limits in place where if a stock reaches a certain price, investors will either buy or sell. So often when the stock decreases a certain price, there's an automatic limit set in there that they will trade off the stock. So once that certain price hits, then there becomes more added pressure because there's more automated trading going on in the markets, which drives the market down even further. Also, with these algorithms, we see a lot of big swings actually happen within the last half hour of the trading day because these algorithms are in place where if a market is at a certain point, then there will be these automated trades or sell-offs that happen during that time. So again, when there's more trading happening, we do see a lot more swings and a lot of bigger swings as well. And case in point, the largest point gains in history, 7 have happened in the month of March on the Dow, which is crazy. And of the top 10 biggest losses on the Dow, 8 of them have happened this year. So these price swings are happening more than ever, and it's becoming a lot harder to determine what's going on in the market. Another factor is the amount of coronavirus cases continues to increase. Today we just hit over 1 million cases of coronavirus worldwide, and that number continues to be going on an upward trend, especially in the US. We are seeing exponential growth with the number of cases. So oftentimes a market rally happens after a peak and when we're starting to see the light at the end of the tunnel. In this case, it looks like the coronavirus cases are still going to get worse and therefore there's going to be more fear and more issues regarding that. And again, to add on to that, more businesses will be closed in the upcoming weeks, and I think more businesses will remain closed for longer than they have anticipated. Which leads me to my next point, and that's unemployment. Today, there was a record over 6.6 million Americans have filed for unemployment, and there was a record change just last week. 3.3 million people filed for unemployment. And I think that's just the tip of the iceberg, as we have not yet seen the full effect of this on the economy. So I think by the end of April, those numbers are going to be quite a bit higher as we see more and more businesses continue to lay off people in the United States and in Canada as well. And then speaking of the economy, we got to look at business earnings. So earnings season happens on a quarterly basis, so every 3 months, and earnings season is the month after the quarter happens. So businesses are required to report their earnings after each quarter. So the first quarter of 2020 is from January to March, and then the reportings happen in April. So in this month, we're going to see some reports that aren't quite going to meet the expectations that were originally sought out at the beginning of the year. But because the quarter was from Jan to March, really the coronavirus didn't really start wreaking havoc in North America until March and end of February. So these reports aren't going to be 100% affected by it. We're only going to see a little. It's actually going to be next quarter, so April, May, and June quarter. That's really going to be affected, and we won't see the effect of those until they report their earnings in July. So no one really has any idea of just how badly this is going to affect these business earnings. But I know a lot of businesses have already retracted their expectations, but there is still a massive unknown to how much these companies will lose. So those are just some of my ideas. Now I want to jump into some technical analysis and compare this market crash to the crashes of 2008 and 2000. Hey guys, and this is the S&P 500 as of the beginning of April. We have the upward trend line and the new downward trend. And we're going to identify 3 points here in which the market hit our downward trend line. And you can see just the other day, we got our third point to kind of solidify our downward trend. And the question now is going to be what's going to happen after these 3 points. But when we have 3 points going against a downward trend, that is typically a good, strong sign of a downward market. And that's definitely a check for the bears. Now, the question is this going to break the resistance line, or is it going to fall down to the original bottom here, right along this level here? Or are we going to see it continue to fall down to new lows? And that is the question. Here is an example from 2008. We see this nice upward trend, and then obviously the big crash. And we're going to compare it to what we just saw from current day. So there's our nice upward trend. And then we have our downward crash here. And that was the first crash. So we're going to zoom in a bit, and we're going to see now the market did rally back to the upward trend line there, but once it hit that downward trend line, it was then a big day for the bears in those shorting markets, as you can see the big sell-off. So that little bull run there lasted just over 2 months and an increase of 14%. So we are already over 14%, but we're only in a week of these upward gains. But again, it's a very similar reaction to this fall here in 2008. So if we zoom out, we can see, again, after this increase, just how much further the stock market fell. And there you go. So here is from
the 2000 crash. And again, we have this nice upward trend line starting from the mid 90s. And then we have this nice crash from the top, bringing us to the bottom here, breaking the resistance line. And if we zoom in, we can see again, the market did try to fight through that upward trend line again. It hit that point and then continued to fall. So that bull market there was short-lived. And that was only about, again, 62 days, 2 months. And we saw an increase of just over 20% before hitting that trend line. And then again, falling down further. So I'm not saying this is exactly what's going to happen now, but these are two similar examples.
So with all these factors in place, I believe this is a false signal and the market is going to continue to crash. I think it might kind of level off for a bit before we do see another full crash, but I think we haven't seen the worst of this yet. So if you do have cash and you are investing, just be wary. And again, this is just one guy's opinion. I am not a professional by any means when it comes to the stock market. These are just my thoughts. Do you agree? Do you disagree? Are you somewhere in the middle? Let me know in the comments below and let's have a good discussion. Again, if you got value out of this video, please give it a thumbs up and please subscribe and join me in this journey of Nick's taxes. I would greatly appreciate any comments or criticisms in the comment section below. So that's it for today's video. I'm Nick from Nick's Taxes. Stay safe, wash your hands, and happy taxing.